Hi, everyone, and welcome to Monthly Market Report with Alissa, Coram, and Jim Roppel, hedge fund manager and founder of the Roppel Report. Jim, great to see you.
Great to see you. It's funny. It always seems like, well, not always, but whenever there's really crazy days, it seems like I'm doing some type of public speaking, like just like today.
Yeah, well, that's, I guess, for the trading community's benefit. Maybe you're a little distracted, but if you ever need to, turn around, look at your charts, make a trade, do what you need to do, Jim. And I know the audience appreciates you keeping them filled in on your thinking on these crazy days.
Well, I'm watching pretty close. It seems like some hunters are shooting at the golden goose, but
Yeah.
he's made of Kevlar. It's all good.
There you go. Yeah, it's looking pretty rough out there right now, and we will get to that. We will get to the current market. We're going to review Jim's analysis of the month of August and how he rolled with the punches in a wild month, because there's lots of lessons in that, right? So not just, hey, this is what happened, but how to handle something like that if it happens again. And then, of course, we'll get Jim's thoughts on how the month of September is shaping up and how to handle. We have a big Fed rate cut decision around the corner. So there might be more twists and turns to come in the coming weeks, Jim.
I fully expect him.
Okay, great. So let's kick things off with a look at August. Here's a look at the daily NASDAQ chart. And today, getting hit pretty hard. We'll get Jim's thoughts on that, what he's doing with his holdings and his thinking on the action here today. But if you look at the month of August, what a crazy month it was. Towards the beginning of the month, we had tons of volatility, a spike in the VIX. If you look at the monthly performance, though, so here's a monthly chart of the NASDAQ, a lot of price discovery before the month of August. NASDAQ actually finished positive by about 0.7%. The S&P 500, even stronger upside reversal here, up about 2.3%. So not a strong start to this month. But Jim, just your thoughts on so many headlines and a lot to navigate, especially at the beginning of the month of August.
Well, I think we had a really atypical violent downside break. It was truly, I call them asteroids coming out of the universe. You can't see them, and it came in violently. You know, 4 weeks down 16%. We were 4% off of a technical bear market, and subsequent recovery almost just as violent. And I have to say, the reason that recovery was so strong is I believe, and again, I know we're having an expectation breaker today, but it doesn't change. Actually, it does change rates. It's more likely the Fed will cut and more aggressively with this morning's economic numbers and today's market action. But the market is looking forward considerably into an AI economic boom and rate cuts. So that's why we came back so quick. But when you look backwards, the culmination of like four dramatic stories, the
Right.
Buffett trimming Apple by 50%, people flipped, the Japan carry trade unwinding, at least to a significant extent, FTC attacks Google, the jobs report sparks recession fears. I mean, that is a lot of heavy
Mhm.
weight.
And
And
there's a fifth one. Nvidia news that their Blackwell chips were delayed by 6 months. There were reports of that over the weekend, also adding to fears.
so I saw that over the weekend and I'm
Mhm.
like, oh my God, Monday's going to be a disaster. And it was. But what I find peculiar is that if I would have seen news like that, I would have expected Nvidia to start a 20% correction,
Mm,
not bottom. And
right.
so it's an opinion that that news was being factored into the market well before it was announced. Otherwise, you could have expected a much bigger down move, and it actually bottomed the stock that day and the market. So, I mean, the market, the big headline is 90% V-shaped correction and recovery trumps everything else we can come up with for the whole month.
Yeah. So there was a lot to deal with, and the VIX spiking as well. So when you see all of that and the fear coming into the market, um, it's one thing right at the open, sort of triage, I guess, and maybe even kind of like today, a big down day. Right now, the Nasdaq is down almost 3%, Jim. The S&P 500 down 1.7%. It's been in a stronger position. We know the S&P 500, but what do you do on a day where you do have a big move down? What's sort of that triage mentality, or how do you prioritize what stays in the portfolio and how you're hedging? Like, what are you doing today?
Well, you have to change your mind. Now, like like a dimmer switch, okay? Always live to fight another day, but, from the report I wrote last night to this minute, I have to dial back my short-term expectations. A 3% down move on a 14% pickup in volume is material. And it has now been the NASDAQ being rebuffed at the 50-day. These are material changes. The kingpin Mac Daddy, Nvidia, it remains the major player in the market, the key stock. Now, Nvidia does not have to go up for us to make money. It just can't be falling out of bed. You mentioned the VIX. The VIX really signals to me that the bottom is in for the correction. Now, the VIX is poking its head up a little bit at this minute.
Hmm.
And one other thing I really want to comment on, when you see a VIX spiking, it is a time to be on the lookout for a bottom. For me,
Right.
it is not a buy. It is, I need to see it exhaust and really give back a great deal of the spike. That is a buy, an attempting to buy signal. But you never know how high VIX can go, or put to call, or
Hmm.
any of these. So we had a nice handle materializing, and now it's gone from a little ragged to very ragged. This is a bit of an expectation breaker to the downside on volume.
For sure.
Um, y- and I have to say, how do you survive this? Everybody wants the red hot name and the red hot sector. So when you have your whole account invariably in electrical technology, you're going to feel a much greater degree of pain. Having a drug stock, having a restaurant stock, having gold is going to dampen the volatility. It's not going to remove it. But when you're running highly concentrated positions, Bill
Hmm.
would always say, well, you can't have the whole thing in high octane because you won't make it to the finish line. So there's a whole lot about, look, if NASDAQ closes around where we are, we're getting a little later. We need the cavalry to come in here, which it does not look like is coming.
Right.
I'm going to be selling in the money calls, more of them. I've already been selling some during the day. I came in with some short calls. Um, and it's
You're saying directly for your individual positions, not on the
not on the index.
index level. Right.
But
Yeah.
I'm not afraid to do that either. Okay. And it's totally different than hedging into an earnings report. Into an earnings report, I
Mhm.
want the upside. Okay. So I'll do a bear put spread into earnings, but I'm not expecting the market to just a gap higher 20% tomorrow. So I'll work around my hedge of short calls. And it is not necessarily saying I'm going to make money. I'm very likely to lose money in the hedge and retain my low cost shares.
Mhm.
I'm trying to preserve those low cost shares. And this is why everyone's not rich. Okay. Today is the day that challenges men and women, cowboys and cowgirls.
Yeah, it really is. Okay, so hedging Nvidia, we know you have a low cost basis here, Jim. I've been trading around this a lot pretty actively this year, and it's moved the needle a lot in my portfolio. But I want it to stay that way, right? I don't want to then give back that performance that I've gotten with this one. So I wanted to be patient with it. With where we closed Friday, I wanted it to hold the recent lows. So the fact that I saw an ugly open, luckily I was shedding about half of my position in the first 10 minutes of the day, and then dumped the rest of it not too long after that, maybe an hour or so into the day. So trying to be active with this one, but it looks like it needs more time. And Jim, so we know that heading into the earnings report last week, expectations so high because this is a company that already heading into the report had 4 quarters in a row of triple digit growth on the top line and on the bottom line as well. So the longer you keep doing that, the expectations are only going to get higher and higher each time your earnings report comes out. Your thoughts when you saw the disappointing reaction to Nvidia earnings last week?
I was prepared with a bear put spread down about 10%, but I just feel like the next chip. Well, first of all, they only beat earnings by 4.6%. It was the mildest beat in the whole cycle. I think Blackwell is going to be a fountain of cash, a fire hose of cash. Now, I want to retain my position or maybe neutralize it completely until that gets traction. If it gets traction, you don't know. But I want to be there until then. So my reaction was, it's 10%. It's not the end of the world. It recovered price wise pretty well, but the volume did not materialize. It was repetitive daily buying day after day after day, but the volume did not materialize. And if you look at SMH, the whole sector, like SMH never got above the 50.
Right. That
It's
was
now been
concerning.
rebuffed. So this is the big, if you read last night, I talked a lot about this, and it is one of the major flaws in the ointment. But again, the market itself has broadened out greatly in anticipation of rates. So while the semis are preeminently important, the broadening market into mid-cap software, ServiceNow, that's a huge one, but there's a lot of financials have come on
Yep.
specifically because of lower rates expectations.
Mhm.
There's a lot of bullish charts out there. Medical stocks are acting great. Nvidia is the one, and I strongly believe it's going to recover. I think 2025 is going to be a good, gigantic year, but I think that I have
Mhm.
to hedge until that starts to prove to be true.
Right.
Today is a really ugly day. Now,
Mhm.
dimmer switch for me. I'm not going to just throw everything overboard. Friday close, far, far more important than pseudo Monday open, Tuesday's open. And things can change really well. I'll tell you, it's bothersome to me that the market has, in the last 10 days, had a lot of gap opens and bad closes. The market has changed and shifted, and you have to shift with the market. You cannot just go, I'm right, the market's wrong, because that's a good way to get obliterated.
Right. And I think the difference here, Jim, if, for those in the audience, maybe they own Nvidia as well, but just the fact that you have a low cost basis. So clearly you have a nice profit cushion here. You're hedging the position on top of that. So cushioning the blow of downside moves because you're bullish on the stock. That doesn't mean, if you had a recent buy or you were only a recent buyer and you were underwater, that doesn't mean that just because you believe in it that you're going to be holding. So in terms of other stocks that you have made recent new buys, have you seen yourself having to walk away or pare back those positions? How's the environment like outside of Nvidia for recent buys?
I really didn't buy much
Hmm.
in the upside recovery. I unwound some hedges, but I didn't go out and add new inventory. I'm really waiting for handles. One or two reports ago, I titled, like, the theme was "We need handles," and we still do. Like, if you look at like a Lilly, it's a stubby little tiny handle. It
Right.
you know
Not much of a shakeout or pullback at all.
Right. We need more time. And this pullback, this gut-wrenching pullback today might be just what we need to shake a few out. And, you know, pullbacks in bull markets generally are buying opportunities on upside positive action. This digestion may end up being very good for us. Knock some of the froth out, get the overbought, oversold oscillators knocked down to better, more reasonable levels, get the fear up. And then we're staring at a 100 basis points of cuts in the face right here. And the consumer is not, look at Costco, please.
Yeah. And I own this one, just for full disclosure, was getting it when it got back above the 50-day line.
Where's the bear case in there?
Yeah.
Can look Best Buy. I mean, I don't like Best Buy, but that is not saying the consumers, packing up and running for the hills.
Right.
The QQQ equal weighted looks very good on the daily. It's handle-esque, breaking a bit. Look, the odds of this retesting the lows of 4 weeks ago with the VIX doing what it did, I think are very low. And I think this is a big scare at this minute. But again, I'm living to fight another day, and I'm taking water over the side big time. So I'm feeling everybody's pain.
Hmm. So when you say live to fight another day, that goes back to the hedging strategy, right, Jim?
Yes.
To sort of cushion the blow. That seems like a huge part of what you do when the market comes under pressure. And it's
We,
for stocks that you're looking to hold for big moves.
we've got a perfect setup here. The beginning of the year, first half, most people have made significant money, have very big cushion. We've had a big pullback. We had a 16% pullback. That's setting the stage for a back end year end rally. And when you have that occur and the market recovers and handles form and you have big cushion, there are no fatter pitches than this. This is the fat pitch in my career. I've seen it several times, and that's when I can throw the hammer down for my risk tolerance as max long, because you don't get a lot of opportunities like that. That opportunity is still in play. Now, if this gets more ragged, it throws cold water on. I have to dial back, but there's no reason by Friday or next Friday we can't have a lot of handles 2-3 weeks long, and then the Fed cuts and off we go. That's very in play. Very in play. One day doesn't change a whole lot. Dimmer switch down a little bit, but
Mhm.
the fat pitch is being thrown.
All right. So, in terms of the Fed rate cut decision coming up, give me more thoughts on how you're planning on handling that. So, we have the Fed meeting coming up September 17th and 18th. Are you looking at past cycles and or past periods, even over the last 18 months, where the market really started getting in gear on Fed rate cut anticipation? Now that it's actually happening, do you think that that's priced in, or do you think that that could be, again, like you said, that fat pitch that the market's waiting for?
Yeah, clearly the financials are discounting the future right now. The 2-year bond futures looks like a high tight flag. TLT is in a massive cup and handle. I mean, that is really telling. Um, the market is certainly not only anticipating but discounting, and I'm just flowing with the market. I'm looking at other names outside. It's time. Technology is acting poorly. Mag 7
Mhm.
has cracked.
Right.
Metal looks great. Apple is really kind of early leading AI beneficiary with the hardware refresh play. Um, but I'm shifting. I think that mid and small cap is probably with the dampening of Mag 7, the market's broadening out. I'm looking at other areas. Like, I've never made a lot of money in insurance stocks, but they're totally in gear. Bank stocks are starting to run. Um, I would love to get well, hold on. Oh my gosh, look at biotechnology. Look at XBI or yeah, look at, it's a beautiful cup and handle. And then LABU for you triple lever cowboys and girls. It's a little more ragged and it's a
Mhm.
lot harder to deal. And
Yeah, very volatile.
I consider these to be trades. I don't really think I could sit with LABU for a year. There's no chance. But XBI reduces your single stock risk, and it's just set up beautifully. Um, so I'm not just going with what was working. I'm adapting to
Right.
the new environment.
Mhm. Yeah, because Cava, that's another thing to talk about for the month of August in our little recap here. A big earnings winner from just a couple of weeks ago. And full disclosure, I do own this one as well. So here's a non-tech leader, Jim, that's looking great.
I love this name because I go and I eat there and I see the lines. It's so easy to understand. I don't have to know about genetic engineering or electrical semiconductor multiplexers. The food tastes great. The lines are out the door. The management is double A plus. They have 350 stores. They're expecting 1,000. I think that's a super modest estimate. It's a can slim model book template name, and it's being corroborated by some others. Like if you look at Eat, not that I like Eat, but it's very jagged, but it is showing a nice base. Um, this sector, there's something going on with Americans and eating out. Okay, the Dash and Uber, there's like a change in consumerism relating to food consumption and the expectation that it will be brought to you. And to me, it looks like there's a lack of people cooking at home. I love Cava, and I strongly suspect you're going to see a move kind of like the long boom in Chipotle. I don't expect it to be as big, but Cava is just a gold star, double two thumbs up golden goose name.
Where do you add and where do you reduce, Jim, in Cava?
I'm a glutton here. I am a non-reduce on this name. I have max conviction. Like my favorite names are totally rooted in a killer fundamental story backed up by the O'Neill variables. It's just 99 across the board pretty much. Where do I bet? Like, okay, so I wrote in the report. I didn't even follow my own advice. I said it's 38% over the 50-day. It's probably going to rally another day or so as institutions get their line, but then you should sell some calls, which I didn't do. And then the insider selling news came out. And that's a big caveat. New issues are so susceptible to secondary offerings and insider selling, but you have to look at how much stock these guys own. I think the CEO sold 10% of his position. It was only 204,000 shares. And one of the early investors, I think they have 6 million shares. They sold off like 10 or 20% of their position. You have to see how that stock is distributed into the market and how long does it take to get into the hands, into the breadbasket of the whales who really want the fundamentals. So this shook a bit more than I would expect, but it has provided a lot of buoyancy to my electrical technology portfolio.
Right. And look at right where it stopped.
Yeah.
Right at the lows of that gap up day. So where do you add, Jim?
I'm going to need a bigger digestion. Like, the bigger the digestion, the more I'll add. But I already have full position. I mean, I'll always add a little tiny bit more just because I'm impulsive and I just see the action. I have to go get a touch, like 1% more. Now, if this thing somehow formed a major base, like 7, 8, 10 weeks, I might go out on a limb and really take I might buy 10% more. I have so much and it's grown so much. I'm probably more likely to trim before earnings reports. When a position starts to grow so big that a bad earnings report could be detrimental to your health, you have to trim. It's easier. It's better to reduce and stay in than get shaken out or possibly blow your whole account up. There's a lot of words.
No, I totally am with you. And when you're talking about that, I can't help but think back to Nvidia. It is one thing when you have a lower cost basis, but I can see traders who maybe were adding a couple weeks or days before earnings, and it has, especially today, this is now turning into a disappointment here, as you said, an expectation breaker for the market. And Nvidia today could have a lot to do with it. You mentioned SMH as well, chips really taking it on the chin, and other names in the semi group. You can look at TSM, KLAC.
You're hitting all my names.
These getting hit very hard today, Jim. So it's one thing to have that conviction, but you have to have the risk management in place as well.
100%. And I'll tell you a way to save your bacon. A lot of stocks that are going to fail will be really close to a pivot, but they'll never go. And if you
Mhm.
anticipate it, now you're stuck. And now you got to take a loss that you shouldn't be taking because you jumped the gun. If you have expectation breakers, wait for upside reversals. Don't
Right.
anticipate pivots. And another thing, when a stock breaks out, a lot of them that are going to fail will break out weekly poorly, and they
Mhm.
won't get to my add points. So I'll only have a lot less of a position than if I just plunged in. But again, with today's uncertainty, I probably should be circling more of the wagons around my elite leaders that I know I want. And if they're breaking, I just need to sell more uh, option premium against them.
Mhm. Because in your words to me, for our prep, Nvidia on the ropes is sort of how you described it. So if it closes down 9% here today, or near the session lows of the day, on the downside, to me, it looks like 100 would be the next level of support to look at if it does keep crumbling. Hopefully it doesn't, but we can't just hope. I know you're, that's one of the things that you believe in too.
One of the reasons I am one of the only guys still in the business who got in when I started is because I just live to fight another day. I will neutralize risk at rapid rate. And now is that moment. I mean, I don't want to get too negative. Uh,
Mhm.
it takes multiple days to really get a trend change. Now today's kind of culminating after a week or so of down, we're getting
Right,
a break further down. It's like a follow through
mhm,
to the downside.
right.
Volume is up. Um, we'll see, but I just have to prepare for the future. And if you guys have screwed this up or you've bought some prematurely, just blow it out and live to see if this thing comes out again. There's no reason it can't be through that handle in 2 weeks. I mean, absolutely none.
Right. I think that makes a lot of sense, Jim. Okay, so you talked about financials and insurance and the medical sector. We talked about some restaurant names as well. So that also, I think, tempers the outlook, right? That maybe this is just more of a tech-led sell-off here today, sparked by Nvidia. But there are other things that are working right now and have been working.
Well, I mean, in the electrical tech area, you have software with Trade Desk, which has been stuttering and stammering. It's a phenomenal name. I put a whole bunch of research in my report last night about it. It's just not quite in gear. It's just sitting there. Spotify continues to firm up and look great on thunder earnings estimates. I mean, they were losing money a year ago. They're going to, I can't see, is it $3, $4 they're expected to earn
In 2024, we're looking at 312% growth.
compared to S&P 6? I don't know why that would be attractive to anyone on a product which I can so easily understand. And then you have Applovian, APP, trying to build a longer handle, which is a absolute can slim royalty 99 comp masterpiece of triple digit
Mhm.
earnings growth. Look at the blue skyscrapers on that weekly of volume. Look at that. I mean, I wrote, I think I said, it's hard to find another stock out there that has that much accumulation in there. Um, Guidewire, GWRE. It's a more mid cap name, more in away from the Mag 7.
Mhm. We've got earnings coming up this week for Guidewire, it looks like. Are you in it, Jim, or just watching?
I'm just watching. It's a little small for me.
Mm.
My smaller fund could have it doesn't have a position now. They could buy it, but I'm not. But you said earnings. Avago's Thursday, and I'm the way semis are acting,
Mm,
I would be I would be heavily hedged into this. Right now, we're out of earnings season, basically. We're at the very end.
right.
Anything you have has got to be hedged. The reactions to earnings has been brutal. We haven't had a robust response to earnings for quite a while, it seems like to me. And another thing we don't even talk about, accumulation distribution on all three major indexes is like E. And it has never in the last year or so emerged into a rich B plus or better zone. So there's a lot of iffy things happening at this minute. I don't want to be too negative. We got to have a little list of positivity at the end. We'll get there.
Yeah. I think we're ready. Is there anything else to add, Jim?
Okay. You cannot underestimate the significance of the Fed put, meaning that if signs start to materialize of a greater deceleration in the economy, the Fed has bullets, man. They're up at 5%. They can cut aggressively. So any type of deterioration in the economy, they're going to more aggressively cut. That's the Fed put. They're going to backstop the market. You have the S&P in a cup and handle. There are a ton of quality bases in spite of today's ragged action that could break out later this week. That's possible. There's a lot of good bases out there. We didn't have one follow through day. We had 4. And that is a very, very good barometer of the probability of success and the magnitude of success. We also, now this is a little bit turning to a yellow light. The rate of power in the market post follow through day was one of a life changer. It is subsequently turned down into, per Eric Kroll, a slog, okay, or a whipsaw. So we've got a little cross current going there, but it started out gangbusters. We're also very close to undercutting the close of the high of the follow through day, which would be another negative. But we've had very low distribution, other than today's really bad distribution day. That's another very good sign. New lows have not picked up. The direction of rates, don't fight the Fed. Okay, this is one of the earliest maxims I learned 30 years ago. That's in gear. The bigger long-term dominant fundamental factor is clearly AI. It is probably going to take up to 2 decades to fully implement and feel the fruits of the power of what it can do for us, the gentrification. The AI revolution is only part of it. Then there's robotics, biotechnology, autonomous driving. There's just so many revolutionary technologies kind of convening all at this point of, I think, the prosperity from innovation. We're going to enter a period like we've never seen. The breadth of the market's improving, and we kind of are almost in bullish alignment with all the MAs. There's a lot to be positive about. Don't flip. Dial your exposure like a dimmer switch, not on off. And maybe at the end of the week, I'm going to be, in a bunker, but I could also somehow see breakouts and buy. I mean, we'll just see what's happening.
Right. Yeah. You're just going to be flexible, right, Jim?
You have to be flexible. And oh no, what if we do retest the lows? Then we get another shot. The golden goose is not going anywhere. Just grab some bench, relax, don't flinch. Follow your rules. Don't oversell. Don't overbuy. Moderation and temperance will get you to the finish line. Just make sure you're buying the right stocks that are going to triple.
Yeah, no kidding. All right. Well said, Jim. Thank you so much, as always, for your thoughts. And we'll see you back here next month for another monthly market report. Thank you.
Already looking forward to it. Have a great day.
Great. Thanks, Jim. And thanks, everyone, for watching. We'll see you back here next month.